Hey class, welcome to this video where we're going to go over the answer to the chapter 1 handout 1. We'll go ahead and get it pulled up here and get going. On my screen here. So this is handout 1. Hopefully you have printed this off and you've tried to get it done before coming to this video. And this just reinforces, all these handouts are just going to reinforce the stuff talked about in the lecture, give you some extra practice before you attempt your homework. All right, so first here, the purpose of financial accounting, or the purpose of accounting in general. You remember, it is to identify, measure, record, and communicate information about a business for users to, there should actually be 2 lines here, these 2 words, make decisions. Okay, that is what we are doing in any type of accounting. And if you recall, financial accounting, those users, okay, users are the investors. In managerial accounting, the users are the management of the company. Next, says to identify the following terms as a current asset, PP&E, intangible asset, current liability, long-term liability, contributed capital, retained earnings, which remember are part of the equity section, and then a revenue or expense, and list which financial statement it would appear on. This is part of the identifying part. We need to be able to identify these. So accounts receivable. Accounts receivable is a current asset. I'll list that by marking it as CA. Okay, all assets are found on the balance sheet. From now on, I'm just going to put BS for balance sheet. Okay, common stock. Common stock makes you part of an owner when you sell stock. That is contributed capital. It is an equity. Okay, it's considered equity, so it is also found on the balance sheet. Buildings. Buildings are PP&E, property, plant, and equipment, also found on the balance sheet. Sales revenue, it should be an easy up because it has revenue right in the name, and all revenues and all expenses are found on the income statement. You remember, I want to remind you this because a lot of people get revenue and profit mixed up. Revenue is the value received for goods sold or services provided. Remember, it's not your income. Income is revenues minus expenses. Inventory is a current asset, which is found on the balance sheet. Bonds payable. The long-term liability. Bonds are going to be issued. We're going to learn about them in the semester. But bonds are long-term debt, long-term borrowing by the company. It is a liability, so it's found on the balance sheet. Remember, all assets, equity, and liability is always found on the balance sheet. Prepaid insurance, that is a current asset found on the balance sheet. Depreciation expense, okay, it says it right there in the name. It is an expense. All revenues and expenses go on the income statement. Okay, and depreciation expenses, what is with that accumulated depreciation? It's just expensing off the cost of some PP&E. Accumulated depreciation. Remember, it is linked to PP&E found on the balance sheet. Accumulated net income less dividends. Okay, that is the definition of retained earnings, which was found on the balance sheet. It's also found on the statement of retained earnings. And so that one is actually on two different financial statements. Once we get our income, then we do our statement of retained earnings, which finds a new retained earnings amount. And then we move it over to the balance sheet. Trucks are property, plant, or equipment, which is found on the balance sheet. Accounts payable. From what we got here, it is a current liability, which is also found on the balance sheet. Cash is a current asset found on the balance sheet. Copyrights. Well, copyrights are intangibles. But that is also an asset found on the balance sheet, and wages payable is a current liability found on our balance sheet. Okay. Really, really important as we move forward in this class, that you're able to look at these and identify what these things are. Okay, are they assets? Are they liabilities? Are they equity? Okay, very important that we get that down as we move along. The second part of this handout deals with the accounting equation. So at the beginning of the year, Morgan Company had total assets of 425 and total liabilities of 260. Use the fundamental accounting equation to answer the following independent questions. So when it says independent questions, it means that for each question, we're not going to build off each other. We're going to go back to the original information. Okay. What is stockholders' equity at the beginning of the year? Well, we got to remember this fundamental accounting equation is assets equals liabilities plus equity. Okay, so if we want to know what our stockholders' equity at the beginning of the year is, we have 425,000 in assets, 260,000 in liabilities. We're trying to determine our equity. Here, we can just subtract 260 from each side. That is your algebra method of doing that. And we find out that the equity equals 165,000. Okay, question 2 here. If during the year total assets increased by 73,000 and total liabilities increased by 32,000, what is the amount of stockholders' equity at the end of the year? So if our assets increased by 73,000, we now have $498,000 in assets. Liabilities increased by 32,000. Now we have $292,000 in liability. We still must balance out here. In this case, our equity would equal 206,000. All right, so if during the year total assets decreased by 52 and total stockholders' equity increased by 35, what is the amount of total liabilities? Remember, we're going back to our original here. They're all independent, so we're going back to this one. Our total assets decreased by 52,000. Now we only have 373,000 in assets. Doesn't give us our liabilities amount, but it tells us that the equity increased by 35. We calculated the equity up there at 165, so now it becomes 200,000. Which means our new liability total is 173,000. All right, and the last one here, we're not given an asset amount, but we are told our liabilities increased by 85. And remember, we're still going back up to this one. So we have 345,000 now in liabilities. Equity decreased by 73,000. So we now have 92,000 in equity. And when you add those together, you find that the assets equal $437,000. All right, so there's handout 1. Very important to understand this accounting equation too. As I said, it is the golden rule. With everything we do moving forward in this class, we are always going to make sure that our liabilities and equity always equal our assets, so we can come out balanced. Thank you, and I'll talk to you again soon.